So what's going on with Meta stock? In this video, I'm going to go through their second quarter 2022 conference call, which was on July 27th, 2022. And we're going to look through the CEO and COO, Mark Zuckerberg and Sheryl Sandberg, and a little bit of the CFO, David Wayner, about what they had to say about Meta Platforms business and what's going on. Here we are with Mark Zuckerberg, the CEO of Meta Platforms, and his opening remarks. He starts by saying um, they now reach more than 3.6 billion people monthly across their services. Recall, Meta Platforms is the parent company to Facebook, Instagram, WhatsApp, Messenger, and so all of the across all those services, 3.6 billion people are using, which is remarkable. Nearly half of the planet uses one of Meta Platform services on a monthly basis. And the number of people using Facebook daily continues to grow, including in the US, although we did experience a decline in monthly actives due to the internet blockages related to the war in Ukraine. It's another interesting thing is that even though they've reached such a massive scale, they keep adding monthly active users across their services. Like you would think that they've reached everybody that wanted an account at their services, but they're still growing, which is impressive to be sure. So that said, we have seemed to have entered an economic downturn that will have a broad impact on the digital advertising business. It's always hard to predict how deep or how long these cycles will be, but I'd say that the situation seems worse than it did a quarter ago. So things are getting worse. That's certainly not what Meta Platforms investors, stockholders like to hear, that things are not getting better, but they're actually getting worse. And for the first time, and we'll see later, Meta Platforms revenue decreased by 1% year over year, and they expect that trend to continue in the next quarter. So things are not getting better, and that's not good news. But let's look further and see what's going on. So based on what management noticed, they took on some multi-year long-term projects to accelerate the business. So they notice these things that are changing in the business. They're not just short-term issues that are going to go away when the economy rebounds. These are long-term structural issues that Meta Platforms felt like they needed to do something about, to change the business, to pivot the business, to align it better with where the marketers are anticipating to spend money in the next several years, not just the next year. So one of the reactions they're taking due to these slowdowns is to their plan is to steadily reduce headcount growth over the next year. And so they're not going to be hiring as many people, and the people that quit, they're going to not replace some of them. So to slow it down, decrease the headcount, to lower expenses, because if revenue growth is slowing down, they also want to slow down expense growth. That way, profits remain elevated. Mark Zuckerberg notes that this is a period that demands more intensity, and I expect us to get more done with fewer resources. In other words, he expects that everyone to pitch in more, to be more effective, to be more efficient now that the business is not growing as quickly. And you can expect that to happen, right? If you're working at Meta Platforms and you notice your colleagues are getting let go, they're getting fired, they're getting laid off, you're going to start to be more motivated to do a better job, because you're going to think to yourself, hey, I don't want to be one of those people that gets let go. So my performance is inevitably going to increase because I'm going to want to keep my job. So one of those structural changes that I noted, the CEO is also talking about here. One of the main transformations in our business right now is that social feeds are going from being driven primarily by the people and the accounts you follow to increasingly being driven by AI recommending content that you'll find interesting from across Facebook or Instagram. So before these changes were made, your Instagram or Facebook feed was a grouping of the posts and comments and pictures and everything from the people you follow. So if you were following a group of people, you were only getting content from that group of people. But more so recently, Facebook is shifting to showing you content based on your interest, based on things that they think you will find interesting, and thereby engage with the platform more often and stay and open the app more frequently. And I've begun noticing this on my account, right? I've begun noticing more ads and posts and things that are more closely related to the things I'm interested in. I've recently started becoming a more avid fan of Formula One racing, and I've noticed that in the last few months, I'm seeing a lot more posts related to Formula One, right? Where before I wasn't seeing those things because the Formula One I'm not following the racers and people in Formula One, but even though I'm not following them, they're still showing up on my feed with their posts. And it is more, it is creating more engagement from me because now I'm looking at that where, I'm spending a little more time looking at a post from the thing that I'm interested in, which is Formula One. Whereas before, I would maybe open the app, look at a picture posted by a family member or friend, and then close the app more quickly. Now I might linger on the app for a few more seconds, and that's a big deal for Facebook. If all 3 billion people are spending just a few more seconds on the app, that's more opportunities to show you an advertisement and more revenue that they can generate. Another one of the things that they're doing is they're promoting Reels, Reels, which is Instagram's and Facebook's counter to TikTok, right? TikTok is gaining a lot of popularity. Short form video is really popular among consumers right now. And so Facebook has launched its rival, which is Reels, and they're pushing a lot of this kind of content to their people that are using the app. So Reels is one part of the trend that focuses on the growth of short form video as a content format, but this overall AI trend is much broader and it covers all kinds of content, not just the short form video, including text, images, links, groups, content, and more. So right now, about 15% of content in a person's Facebook feed and a little more than that on the Instagram feed is recommended by AI, and they expect these numbers to grow to more than double by the end of next year. So whatever we've been noticing, the AI recommendations, whatever we've been noticing, that's going to more than double next year. So expect to see a lot more AI recommended content and less content um, from the people that you're following, family, friends, colleagues, and that thing. Zuckerberg also noted that I shared last quarter that Reels already made up 20% of the time people spent on Instagram. This quarter, we saw that more than increase by 30% in time that people spent engaging with Reels across Facebook and Instagram. So they are starting to notice the positive effects of sharing more Reels with their users. People are now spending more time on Reels, and that isn't very surprising considering how popular TikTok is. It's not surprising to see Reels is more popular among Facebook and Instagram users compared to stories and images, which are more static based and more image based. And now this is more short form video. Mark Zuckerberg wanted to point out that even though they're doing more of this type of AI recommendations, he wants to highlight that they're still ultimately a social company focused on helping people connect. So even though they're going to be pushing these types of content more often because it helps engagement, ultimately what they aim to do is helping people connect. And this is a form of, good publicity for them to say that they're, helping people connect and help and maintain healthy social connections and all of that. But uh, in reality, what's going on is Facebook is pushing the thing that is most profitable reels and artificially recommend our AI recommended content, whatever is the thing that's going to produce more profits and revenue, is the direction the company will, in my opinion, gravitate towards, because that's what sustains the business. They cannot sustain a business that's not driving revenue and profits, even though that is more socially acceptable and more publicity friendly. If it's not generating revenue and profits, it's just not sustainable. So they're going to have to shift towards these more monetizable features. Moving further, he highlights that advertising faces a number of challenges. One near term challenge is the growth of short form video, like I highlighted earlier. Reels, because it's new, doesn't yet monetize at the same rate as feeds or stories, right? Because it's new, they haven't figured out how to best monetize this type of format, right? That takes time. It's not just snapping your fingers and saying, okay, we're switching to this and this is going to just automatically generate as much revenue as the picture format was. It doesn't work like that. It takes them time to develop the ad formats and all of that to integrate it into the software. And so the faster that Reels grows, the more revenue that actually displaces from higher monetizing surfaces. So because it's Facebook is recommending more Reels to customers, that means it's not recommending image-based stories and traditional formats, and that's taking away revenue from the business, right? Because Reels is not monetizing at as high a rate as the former platform was, but Facebook is pushing out this less monetizable um, format for now. And so this in the short term, there's a disconnect between where it's taking away from and where it's pushing towards. And so until it figures out the monetizing for Reels, it's going to be a revenue dilutive effect. And but still, he highlights that they crossed the $1 billion annual run rate for Reels advertising, and Reels is at a higher revenue run rate than Stories was at the identical time when it launched, right? So Stories was their most recent new format before Reels, and Reels is making better progress than Stories was at this time in its launch. So they're learning across the learning curve and getting better at launching new types of formats and monetizing new types of formats. And so that's good news for investors to look at this. Their ability to innovate is a critical element into investing in meta platform stock, because a business over the years needs to evolve, right? It can't rest on its laurels and say this is one awesome product, we're just going to sit back and let this one awesome product generate all the revenue and profits. They need to continue innovating, and Meta Platforms is demonstrating that with Stories and now Reels. The second challenge that it's facing is from the signal loss from Apple's iOS changes. So, if you're not aware, Apple changed its platform, the iOS, in late 2021, which makes it more difficult for Meta platforms to collect data, which makes it harder for them to sell targeted advertising. And so that's another challenge for revenue. And in talking about the macro economy, Zuckerberg notes that they can't control the timing of when things will bounce back, but they note that in periods like this, when marketers reevaluate their budgets, they find the highest performing advertising. And in the last recession, we invested in our ads business through the downturn and came out stronger on the other side. So this is Mark Zuckerberg trying to assuage investors, saying, "Hey, look, this is not our first rodeo. We've been through this before and we came out stronger on the other side. So you don't need to panic. Like, we got this. We know what we're doing. We'll come out of this stronger on the other side." The other major trend going on with Meta platforms in 2021, they noted that they're investing massively into the metaverse. And in fact, that's what led to their name change. They used to be known as Facebook. Now they're known as Meta Platforms, in an effort to change the perception and change the ideals that now, hey, look, we're becoming a metaverse company. They've already invested over $10 billion in the metaverse. And the reason they're doing it is it enables deeper social experiences where you feel a realistic sense of presence with other people. And that's true in the metaverse. It has the potential to be more realistic. And another reason is what I've highlighted in green here. Um, I noted earlier that Meta Platforms is suffering the consequences from Apple's decision to change the privacy policy, and it does not sound like Meta Platforms is happy about that. Their own business is suffering because of something that Apple decided to do. And by investing in the metaverse, they're not only investing in the software side of it, but they're also investing in the hardware side of it. So now they're not going to be limited by constraints on competitors, right? They can provide both the hardware and the software. They control more of the process. They can determine their faith more holistically than they can right now. And Mark Zuckerberg feels even more strongly that developing these platforms will unlock hundreds of billions of dollars, if not trillions of dollars over time. So he sees a massive opportunity here that is worth investing in, which investors so far up until this point, looking at its stock prices down nearly 50% from its high, so far that indicates to me that investors are not as convinced as Mark Zuckerberg is in the prospects of the metaverse. Moving on to Sheryl Sandberg, the former chief operating officer. She recently resigned her post and they've replaced her. But in this conference call, she highlighted a few things which I wanted to make note of. First of all, noting revenue of 28.8 billion was a decrease of 1% year over year. That was the first ever decline for the company in a long time. And then another headwind is the normalization of e-commerce after the pandemic peak. This is also hurting Facebook, Meta platforms, because when people are spending more money online, businesses were spending more money to advertise because they can measure that, right? They want to get you to click on an advertisement that will bring you to their website to buy something. If you're not intending to buy something online, they're not going to advertise to you trying to get you to click to go to their website. That's another reason why ad revenue has fallen on Meta platforms. So right now their focus with Reels is to ramp up the advertising load, meaning just showing more advertisements, improving performance, and making sure the ads are easy for advertisers to create. And secondly, they're adapting their ad system to do more with less data because of Apple's iOS changes. They don't have as much data to work with, so they need to do more with less data. And just like Mark Zuckerberg, COO Sheryl Sandberg highlighted that this isn't the first time the company is going through a transition. They've been through this before and they've came out on top. And she highlights the major shift from desktop to mobile. Remember that just over a decade ago when the iPhone first came out and consumers made that major shift from spending most of their time on social media apps going on to social media apps from their computer to now going on to social media apps from their phone. And so that was a headwind for Facebook at the time. They dealt with that effectively, and also going from when it was just scrolling through their feed to now having the stories, which was the a counter to what another competitor, Snapchat stock, did a while ago, and so they came out with stories, which is a counter to Snapchat. And so this is another highlight. Like, hey, I know I know TikTok is extremely popular right now, but now we launched our counter, and this is not the first time we had to counter another popular company, and we've done that effectively. So don't count us out just yet. Okay, and we will end with looking at CFO David Wayner and a couple of comments that he made in this conference call. Most notably, discussing free cash flows, saying that free cash flow is 4.5 billion. and that we repurchased 5.1 billion of our stock in the second quarter. So that goes a long way to show what the company thinks of itself. It's betting $5.1 billion on itself, which says that, hey, we think our stock is incredibly undervalued. We like our prospects going forward, and we think that you, investors, are undervaluing Meta Platforms stock in the marketplace. And hey, look, we're putting our money where our mouth is, $5.1 billion worth. Another interesting note here is that in the second quarter, the total number of ad impressions served across their services increased by 15%, but the average price decreased by 14%. So that's not good news. Facebook Meta Platforms was showing a lot more advertisements in the quarter, right? If you're going on the app, you're seeing a lot more ads, but at the same time, the price of each ad was down 14% compared to the same time last year. It goes on to explain that the year-over-year decrease in pricing was driven by a reduction in advertising demand, the mix shift in ad impressions, meaning that going from stories to reels was they get lower revenue from that format than the older format, so that was one reason why the price per ad also increased. Okay, so up until this point, we've been looking at all of the bad news in Facebook, right? Most of the stuff we looked at was, this is decreasing, that's declining, we're facing this headwind, we're facing this or that, and all of that bad news. But it's important to put all of this into context. Family of apps, their operating income was $11.2 billion and in a impressive 39% operating margin. This is an incredibly high operating profit margin. Remarkable to generate $11 billion at an operating margin of 39%. I would not be surprised if you could not find 10 other businesses that are generating more than $10 billion in operating income at an operating margin near 40%. This is an incredibly difficult thing to do and just highlights how profitable Meta Platforms business really is and how lucrative this social media business is, right? So despite all of those headwinds, put those into context. The business is still incredibly profitable. 11 billion in operating income in just a quarter, 39% operating profit margin, 2.9 billion people using the app, nearly half of the planet. The business is incredibly healthy, generating excellent free cash flow. We saw earlier 4 billion in free cash flow. Sure, the growth is slowing down. It's not growing as quickly as it was, and it's facing some challenges. Yes, admittedly, those are all true. But still, the business is, even at this point, even if it was not to grow any further from this point, it's generating very, very good profits and profit margins, and it's investing, and it's got plans and reasonable expectation to expect that it can improve, it can grow as it deals with these issues, deals with the changing consumer tastes, deals with the near-term headwinds. You can reasonably expect Meta Platforms to come out on the other side stronger than it was going into it. All right, so that's all I've got in this review of Meta Platforms stock, and I will see you next time in the next review of earnings call transcripts. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.